On June 12th, a company sold $75 billion of stock in a single day. The biggest IPO in human history, bigger than Alibaba, bigger than Facebook. The company was SpaceX, the rocket company, the one that lands boosters upright on a barge while you watch on your phone. Here's the part nobody on IPO day wanted to sit with. Last year, the rocket business lost money. The artificial intelligence business lost more money. And the only part of SpaceX that actually turned a profit sells internet. So this video is one simple question about the most valuable space company ever built. When people paid $1.8 trillion for a rocket company, what did they actually buy? When SpaceX filed to go public, it had to do something it had never done before: show its actual numbers. And the filing splits the company into 3 rooms. Room 1 is Starlink, the satellite internet service. In 2025, it brought in $11.4 billion, roughly 60% of the entire company, and it was the only part of the building making money. Operating profit, $4.4 billion. Room 2 is the launch business, the actual rockets, the thing on the logo. 165 flights in 2025, a world record. That room brought in about $4 billion, and it lost $657 million. The reason? Starship. They're spending billions developing the next rocket, money that eats straight into the launch numbers. Room 3 is the AI division, a company called xAI that SpaceX absorbed just months before the IPO. $3.2 billion in revenue, and a loss of $6.35 billion. So add it up, the famous business loses money. The futuristic business loses more money. One room is keeping the lights on for the entire building, and it's the room selling internet plans to people who live too far from a cable line. And here's a detail that tells you everything. That $18 billion revenue number, it's flattered. To get there, they folded xAI's revenue retroactively into the books. The actual rocket and internet company, the thing on the poster, did closer to 15. SpaceX is famous for one thing and profitable from a different thing, and those two things are not the same thing. All 3 rooms together lost about $4.9 billion in 2025. And then, in just the first 3 months of 2026, once xAI's losses hit the books for a full quarter, they lost $4.3 billion more. Now, to be fair, and this matters, Starlink is not a fluke. It's one of the best businesses in tech right now. It went from about 2 million subscribers in 2023 to over 12 million by June 2026, across more than 160 countries, in 3 years. And here's the elegant part. The reason Starlink crushes every competitor comes back to the rockets. SpaceX launches its own satellites on its own reusable rockets. Everyone trying to compete, Amazon included, has to rent a ride to orbit on rockets that mostly get used once. So the launch division that loses money on paper is the exact thing that makes the internet division impossible to beat. That's a genuinely brilliant machine. I want to be clear about that before the next part, because here's the crack. The subscriber growth is slowing at the top. To keep adding customers, Starlink is pushing into poorer markets where it charges a lot less. And in wealthier countries, ordinary 5G is quietly eating into the high-paying segment. The engine is real, but it's an engine, not a miracle. It has a top speed. And as you're about to see, the price tag was built for a miracle. Let's talk about that price. The whole company did about $18.7 billion in revenue last year. It went public at a value of roughly $1.8 trillion. That's about 100 times its annual sales. A normal healthy company trades at 2 or 3 times sales. Even high-growth tech names rarely touch 20. SpaceX listed at 100, and you don't have to take my word that that's steep. Morningstar, a research firm, the boring kind, the kind that actually reads the entire filing for a living, looked at the same numbers and said the stock is worth about $62 a share. It listed at 135. So one of those two numbers is wrong by more than $1 trillion. Now here's the part the rocket footage distracts you from. This company is not just unprofitable, it's burning cash at a staggering rate. Last year, its free cash flow, the actual money left over, was negative $9 billion. By its own filing, SpaceX doesn't expect to generate positive free cash flow until 2029. And to bridge the gap, it's taking on around $25 billion in debt. So, the most valuable IPO in history is a company that loses money, burns cash, borrows billions to keep going, and won't turn cash positive for years. And watch how fast the price got here. End of 2024, around $350 billion. Mid-2025, $400 billion. End of 2025, $800 billion. June 2026, $1.8 trillion. It roughly 5x'd in 18 months, while losing money every single one of those years. Then the market spoke. On June 16th, the stock hit its all-time high, $225 a share. At that price, SpaceX was worth about $2.7 trillion. 1 week later, it had fallen to $147. More than a third of its value, gone, in 7 days. The doubts didn't wait for a scandal. They showed up almost immediately, which raises the obvious question. If the numbers are this stretched, what's holding the price up at all? So let's name the actual mechanism. A company that loses money cannot justify $1.8 trillion with a spreadsheet. The spreadsheet says no. It can only justify it with a story, and SpaceX has the single best story on the stock market. Rockets, Mars, satellites, artificial intelligence, data centers in space. You cannot write a more exciting sentence than that. Watch the timing. A few months before the IPO, SpaceX absorbed Musk's AI company in an all-stock deal. No cash changed hands, folding a business burning $6 billion a year into the rocket brand. The losses got bigger, but so did the story. So, is SpaceX a great company? Yes, genuinely. The launches are real. Starlink is one of the best businesses in tech. The engineering is not a trick. But great company and worth $1.8 trillion are two different sentences, and only one of them shows up in the filing. The filing says, 1 profitable internet business, 2 divisions losing money, a third AI company just bought for $60 billion more, $9 billion in cash burned last year, $25 billion in new debt, and a price built almost entirely on what might happen next.